Your first $10,000 isn't just another number in your bank account. It can completely change the way you deal with money. But why?
Well, reaching 10 grand gives you this massive amount of financial breathing room, even though, let's be real, it doesn't automatically make you wealthy overnight. In this explainer, we're going to unpack exactly what happens when you hit this huge milestone.
So let's dive right into section 1, why your first $10,000 matters.
When you've got zero savings, literally every single unexpected event feels like a complete crisis. Think about the last time your car's check engine light came on while you were rushing to work, or maybe your fridge suddenly died right after you stuffed it with a week's worth of groceries. Without savings, those aren't just minor inconveniences, right? They're genuine emergencies that can absolutely derail your entire month. They force you to swipe that high-interest credit card just to survive, which kind of traps you in this awful cycle of debt. But when you have $10,000 just sitting there ready to go, emergency expenses just become, well, expenses. You get genuine financial breathing room. You're not operating out of sheer panic anymore. Instead, you're making everyday financial decisions from a place of real confidence. The emotional weight that just vanishes from your shoulders is, honestly, massive.
Now, I want to be super clear about something right up front. $10,000 is not some universal magic target for everyone. Everybody's ideal emergency fund is going to look different. It depends entirely on your unique income, your daily expenses, your debt, and just your life circumstances in general. Like for a single person living in a low-cost area, 10 grand might easily cover 6 months of expenses. But for a family of 4 living in a major city, it might only cover a few weeks. But as a benchmark, that psychological and practical milestone of hitting 5 figures, it remains incredibly powerful for pretty much everyone.
Okay, moving on to section 2, the path to $10,000 and how you actually get there.
To make this abstract goal feel super concrete, let's look at a completely fictional but highly realistic American worker. Let's say this person is earning an average salary of around $60,000 a year. Between paying rent for a decent apartment, buying groceries that literally seem to get more expensive every single week, covering a car payment, and trying to chip away at student loans, money is tight, really tight. There usually isn't a whole lot left over at the end of the month. So for this person, saving $10,000 is absolutely not going to happen overnight. It's like a giant puzzle. It takes time, intense discipline, and a very specific strategy.
Let's visualize the journey. Think about how your financial flexibility levels up at each specific milestone. Hitting that first $1,000, honestly, that is usually the hardest part because you really have to break old habits. But once you do, you've essentially plugged the smallest leaks in your budget. A minor car repair won't put you in the red anymore. Then you grind your way up to $3,000. Boom, suddenly you can replace a major appliance without ever needing to touch a credit card. By the time you hit $5,000, you've got serious breathing room. You could totally weather a short gap between jobs if you had to. And finally, you push all the way through to $10,000. Each step completely changes your daily stress levels, stacking confidence on top of confidence.
So what does this fund actually protect you from? Well, highly realistic, everyday emergencies. 10 grand easily covers sudden car repairs, unexpected medical bills, urgent household fixes, or, emergency travel if you need to quickly visit a sick relative. Most importantly, it acts as a bridge if you experience a temporary loss of income. But let's temper expectations for a second. $10,000 is not going to cover every single possible disaster. It's a shield, not an impenetrable fortress. It's just meant to absorb the shock of life's typical bumps and bruises, keeping you from falling all the way back down to zero.
Which brings us to section 3, avoiding the big mistake that happens once you finally hit your goal.
I need to state this crucial paradox as plainly as I possibly can. Having $10,000 saved doesn't mean you suddenly have $10,000 available to spend. The temptation here is massive, I know. You open your banking app, you see those 5 figures staring back at you, and all of a sudden, that tropical vacation, or that down payment on a new car, or those designer clothes, they seem totally affordable. You feel rich. But if you blow it on once, you are instantly resetting all the hard work, all the sacrifice, and all the security you literally just spent months or even years building.
And that is exactly why drawing a really sharp contrast between these two mental buckets is so incredibly vital. Emergency money is completely different from spending money. Emergency money is your insurance policy against life. Spending money, on the other hand, is for lifestyle upgrades. Physically and mentally separating these two is the ultimate secret to keeping your savings intact. You might want to do this by keeping the 10 grand in a totally separate, high-yield savings account at a completely different bank. Seriously, if you can't easily see it every single day right next to your checking account, you won't be tempted to use it for a random impulse buy. Out of sight, out of mind.
All right, let's jump into section 4. What actually changes after you hit that $10,000 mark? There are 5 major shifts that happen post-milestone, both practically and psychologically. First, emergencies just become way less frightening. It's an annoyance now, not an absolute apocalypse. Second, you start relying a lot less on high-cost borrowing, like credit cards or payday loans, which literally saves you a fortune in interest. Third, and honestly, this is a huge one, you actually get more time to make financial decisions. You aren't forced to take the first terrible job offer just to pay your rent, because you have a buffer to find the right opportunity. Fourth, saving the next 10 grand feels incredibly achievable because, well, you already have the blueprint. You know exactly how to do it. And finally, you shift out of pure survival mode into strategic, long-term thinking. You can actually start planning for a future that's 5, 10, or even 20 years down the road. But again, we gotta keep things in perspective here. Saving $10,000 does not automatically equal wealth. It is a really powerful, absolutely necessary stepping stone. It's like the solid brick foundation of a house, but it isn't the house itself. It's simply the launching pad that lets you start building true, long-term wealth without being constantly dragged backward by bad debt. So what's next? Let's look at section 5, your next financial steps. Now, a super quick disclaimer before we get into this. We are not providing personalized financial, investment, tax, or legal advice here. This explainer is strictly educational. Your very next step depends entirely on your own unique financial situation. I mean, what makes sense for a 25-year-old drowning in student debt is going to look vastly different from what makes sense for a 45-year-old with a mortgage, right? That being said, we can definitely outline a few general paths you could take to keep building that financial security. First and foremost, you absolutely must maintain that emergency reserve. If you use it to cover a sudden medical bill, your top priority is to refill it. Second, this is usually the best time to aggressively pay down high-interest debt and get those credit card balances down to 0. Third, you can start saving for shorter-term goals, like a down payment on a house or maybe a wed. Fourth, you finally have the stable footing to start learning about long-term investing, putting your money to work in the markets to grow over time. And lastly, with the daily stress of survival finally off your shoulders, you might choose to focus on increasing your income. Maybe that's pushing for a promotion, learning a new high-income skill, or starting up a side hustle.
And that brings us to our final point, section 6, the real financial lesson.
Honestly, the biggest benefit of your first $10,000 may not actually be the money itself. It may be the financial habits you developed to reach it. Let that sink in for a second. The true wealth you've acquired isn't just those digits sitting on a screen at your bank. The true wealth is the total behavioral transformation you had to undergo to get there. Think about the specific, hard-earned habits that were forged on that journey from 0 to 10,000. You had to learn consistency, putting money away every single month, no matter what life threw at you. You developed an intense spending awareness, tracking exactly where every single dollar was going and ruthlessly cutting out the waste. You completely mastered delayed gratification, learning how to say no to something you really wanted today just so you could have absolute security tomorrow. You figured out how to actually stick to a budget, and most importantly, you practiced avoiding unnecessary debt. These core habits are the actual machinery that will generate your future wealth. The money? Well, the money is just a byproduct of the person who had to become to save it. $10,000 won't make you rich overnight, but reaching it can change your relationship with money. Because once you know you can build $10,000, the next financial milestone doesn't seem impossible anymore.
Subscribe to Anurag Global for simple and practical explanations of money and personal finance. See you in the next one.